What's up? What's up? What's up, my mind, your money business folks? It's me yet again with another video. I'm a little late. I actually just decided at the last minute to do a video. I was going to just relax today. I am a veteran, for those of you that do not know, so I've been participating in veterans events. I was outside a few hours today. If you can't tell, I'm actually sunburnt. I'm darker over here. So I'm pretty tired. I was editing photos because I was taking photos last night and today. But I felt the way, so I decided to come on and do a video about the stock market, right? Lower your debt to income ratio. That's my advice. You know, seek financial advice because I am not a financial advisor. You know, that's my disclaimer. So all the information that I put out on this channel and in these videos are for entertainment purposes only and reflects my opinion. So before you invest any of your money into anything that I may talk about on this channel and in these videos, please consult with a financial advisor first if you're not capable of doing it on your own. So next week, what you need to know about next week going into the stock market. Inflation and retail sales data is coming out next week. Come Monday, starting next week, a lot of stuff is coming out, which could affect the stock market in a negative or positive way. So let's see what this article is saying. Stocks just had their best week of 2024 last week. All three major indexes pressed to record highs after Donald Trump won the 2024 presidential election. All three major indexes pressed to record highs after Donald Trump won the I just read that. Either way, for the week, the S&P 500 and the Dow Jones Industrial Average rose more than 4.5%, while the NASDAQ Composite rose nearly 6%. And I see those gains in my investment portfolio. Things are looking really good. Okay, in the week ahead, come Monday, a fresh reading on inflation and retail sales will lead the economic dollar. Not dollar, but calendar. In corporate news, quarterly results from Home Depot, Cisco, and Disney will highlight another week of earnings reports. Okay. Price check. In a widely anticipated move, the Federal Reserve cut interest rates by 25 basis points last Thursday. In a press conference following the announcement, Federal Chair Jerome Powell, my buddy, declined to comment on the central bank's plans for future rate cuts. We don't think it's a good time to be doing a lot of forward guidance, Powell said. He later noted that Fed officials will need to gauge the economic data released between now and December before knowing if the central bank will cut interest rates again this year. Because the Feds are meeting again next month to talk about rates. Okay, the first data the Feds will consider ahead of its next meeting will come out on Wednesday with the release of the October Consumer Price Index, CPI. Wall Street economists expect headline inflation rose just 2.6% annually in October, an increase from 2.4% rise in September. Prices are set to rise 0.2% on a month-over-month basis per economic projections, in line with the increase seen in September. On a core basis, which strips out food and energy prices, CPI is forecast to have risen 3.3% over the last year in October, unchanged from September's increase. Monthly core price increases are expected to clock in at 0.3%, also in line with the September gain. Interesting. The October CPI report will likely support the notion that the last mile of inflation journey back to target will be the hardest. Wells Fargo Economics team led by Jay Bryson wrote in a weekly note to clients on Friday. Okay. Retail readings. The final monthly retail sales report before the start of the holiday shopping season is set to release on Thursday. Economics estimate retail sales increased 0.3% over the prior month during October. The control group of retail sales, which excludes several volatile categories like gasoline and feeds directly into gross domestic product, is also expected to have risen 0.3%. Entering the release, several trade trackers point to the fourth quarter being off to a solid start for economic growth. So that's a good thing, right? Especially for those of us that are investing. The Atlanta Fed GDP Now tracker currently projects the U.S. economy growing at 2.5%. Yeah, so yeah, that's pretty much it. Yeah, I don't invest in Disney or Cisco. But it does say here, like, Trump trade lifts big tech. In a roaring rally over the final 3 trading sessions of last week, much has been made about trades like financials that could benefit from presidential-elect candidate Donald Trump's policy. Big tech also saw significant upside. Roundhill's Magnificent 7 ETF, which tracks Apple, Google, Microsoft, Amazon, Meta, Tesla, and Nvidia, hit fresh record highs on both Thursday and Friday. 3 of the Magnificent 7 stocks, Tesla, Nvidia, and Amazon, outpaced the S&P 500 on the week, with Alphabet also coming close. Tesla had a unique Trump-related catalyst, with investors banking on CEO Elon Musk's big bet on the president-elect's campaign paying off. Yeah, you know, like, stocks are doing well, especially Tesla. Tesla's evaluated over $1 trillion now. I think it's at $1.03 trillion market cap evaluation, which is good for those of us that are investing in Tesla. And I do invest into Tesla. You know, the S&P 500, my S&P 500 ETF is over 26%. My information technology ETF is over 29%, if I'm not mistaken. Nvidia is over like 180%. So my stocks are doing well. So that's why it's very important that you invest into these paper assets that are appreciating, vice investing your money into depreciating assets like cars, clothes, trips. You know, digging yourself into more and more debt with credit cards. You know, I believe in lowering your debt to income ratio, getting out of debt. I followed the Dave Ramsey plan, which I talked about in previous videos. I got myself out of debt. I owe no one any money. I am no longer a slave when it comes to money, to any corporation or system. So therefore, I'm able to invest about 80 to 90% of my income in to appreciating assets, real estate, paper assets, stock market. I have rental properties. And so that's what I wish for you. But in order for you to do that, you first have to make the decision to do it and then come up with a plan. You have to construct a plan in order to do anything. And you also have to have the discipline to seek it through. I hope that made sense, because I don't remember anything I just said, because none of this was planned. I just wanted to do a video because it wasn't my plan to do one today. And I felt a little eerie, like I stated earlier, about not posting one because my thing was, you know, the thing that I said to myself when I started doing these was to post a video every day. And so I'm trying to stick to that. So yeah, so I'm going to end this video now because I'm actually cooking some quinoa. All right, so you guys take care. Oh, like, comment, subscribe, share this video. Let me know what you think. If you think anything at all, yeah, get on board, people. Get on board this train. There's a big wealth transfer happening every day in the stock market. And a lot of you who are not participating in these assets are missing out on this transfer of wealth and creating a solid foundation for yourselves and your family and for your legacy and those that come after you when you're gone in the flesh. All right, so you guys take care. Happy Veterans Day. Peace.